Now I know it's some time before we have the mega polls in 2019, but Nagaland and Meghalaya have gone to polls today, and the BJP may or may not be able to make a mark in these two states. But what are the markets factoring in? Is the BJP likely to win the 2019 general elections, which is probably the mood? With global brokerage house UBS says so. And joining us to talk about that and the intermittent period as well until the 2019 elections happen, if they happen in 2019 in the first place, is the author of this note, Gautam Chowcharia. He joins us to speak about this. Gautam, good morning and thanks so much for joining in. Well, a new look Gautam Chowcharia, I must say. Gautam, would the election season have a new look too? Because until 2019, with an assumption that the elections happen in 2019, we have a bunch of local municipality and state elections happening as well, which will keep the markets and the political climate volatile.
Yes, absolutely. But if you talk to investors globally and in India, I think nearly all investors with a very high degree of probability assume and presume that Mr. Modi's government is going to come back and probably with the majority. So in a way, the markets are pricing in continuation of the current government and therefore the policy framework. And that's what's being reflected in the rich multiples and the confidence market has.
What have you guys been doing when it comes to these conversations? Because I'm sure there is a set of investors who believe that it's more or less a given, but would be wanting finer details about what could happen, what could be the math, what could the math be. There is an impact on the lower house and the upper house as well. And there's, as I said, a clutch of smaller elections that make an impact on the mood, if not the overall election outcome.
Absolutely. So again, we're not in a position to forecast what will happen. Even exit polls go wrong. Forget opinion polls and forget our views. So what we tell investors is to look at the pointers ahead over the next 1 year. And the pointers, as you said, are various state elections. Possibly even opinion polls. We might see opinion polls happening middle of the year, specifically if talks around the national elections being preponed to late this year starts happening. So if that happens, we'll also have opinion polls even for the full country sometime this year. And what we tell our clients and investors is that one of the key things to track from an analytical perspective is whether the fragmented opposition starts uniting, because behind the narrative of the popularity of Mr. Modi now and in 14 is also electoral arithmetic. If the opposition starts uniting, then that could also have a bearing on the outcome of elections.
Okay. I have one question from markets perspective, Gautam. And I think you make a valid point and probably a no-brainer of sorts that a change in expectations of what happens in the 2019 elections could have an impact on the market multiples as well. And investors will probably monitor all of those very, very closely. What is, I mean, we'll know what happens in 2019 only in 2019. And let's work for a moment with the assumption that elections happen on the date that they are supposed to happen. If indeed any of the state election results throw up a result which the market doesn't want to see, and there is a high probability of some of those things happening in the state of Rajasthan, for example. But if indeed that were to happen, would that cause an immediate derailment in the market multiples, and to what extent?
So our sense is, from a state election perspective, if I talk to investors, the investor feedback suggests that the markets and investors would worry only about the state election results later in the year. Unlikely they'll worry about, say Meghalaya, etc. And even unlikely they bother much about Karnataka, for example. They will bother about the three big elections end of 2018. So that's some time away. It's a few months away. But before that, if you start seeing opinion polls happening into the year, then obviously markets will start taking cues from that.
Gautam, good morning. Ira joining the conversation. My questions are slightly more basic and, for a market audience may seem a little too simplistic, but I'm going to ask them in any case. Tell me, 4 years into this government's term, is the market convinced that this government's economic policies are any different or substantially different from the previous government's policies? And if not, then why does it matter so much who comes back?
So there are two things on that. So policy broader trajectory towards reforms. You could argue it both ways, but what we have seen definitely in the last 4 years is definitely better execution in terms of the reforms actually getting done, like GST, FDI, other stuff, and including ease of doing business. So the broader policy direction has definitely picked up pace. And second is not just policy, but even in terms of execution on the ground, like infrastructure project taking up or focus on that, that's definitely picked up pace over the last 4 years. Now we can argue whether it's picked up enough versus what India needs or versus what markets itself were expecting in 14. But there's definitely a clear pickup happening over the last 4 years. What's also happened from the market's perspective, and this is specifically true for the global investors, India's macro has improved a lot. So inflation coming down, fiscal being in control, currency being unstable, that's given a lot of comfort for global investors that India, unlike in 13 where it was one of the fragile five, is now being talked about as one of the future growth hope stories. So that's definitely the big change which has happened over last 3 to 4 years. Now you could argue how much of it is new policy, etc. But at the end of the day, those results are there to be seen.
On the first, Gautam, so what are the indicators that you all are focused on? I mean, you could look at something like stalled projects and say that there hasn't been a substantial change in that number. You could look at private investment for various reasons and say that the government has not managed to push that up despite, wanting to crowd it in by pushing forward public investment. So on the first, when you say that there is change on the ground, with the exception of GST, which is also having a fair amount of teething troubles, what indicators are you looking at?
So, for example, the pickup in road construction. So that's been one of the clear areas where we have seen a pickup by both in terms of NHAI, government, and including at the state level. So that big push has shown up in pickup in road construction. We are seeing early signs of pickup in housing activities with the government's focus on affordable housing. So again, it's not broad-based. The private capex is not just what the government does. So private capex has been a worry. And from our macro perspective, we do not expect a pickup in private capex in a hurry. So we have been underweight industrials infra. We still remain underweight. But from a broader government policy focus, there are positive areas where we have seen activity pick up over the last 3 to 4 years.
Sure. And on the macro front, on macro indicators, Gautam, again, things like oil, of course, have helped this government in the first 4 years. That is turning, and I'm surprised to see not enough people pay attention to the fiscal trajectory and the fact that it's been pushed out, the fact that they're no longer wanting to target revenue deficit. I'm surprised to see the investor community not focus a bit more on the fiscal side. So
it's not that the investors don't focus on that, but the trajectory, if you see the last 4 or 5 years, the trajectory has been positive. Slight tinkering here and there, or slight pushing out, I think investors can live with that as long as the broader trajectory and discipline is being maintained. So it's not a repeat of what we saw in 09-10 or 08-9-10, where we had a major fiscal expansion and it remained at much higher levels. So consolidated fiscal deficit remaining at 6.5-7% doesn't leave room for fiscal expansion per se, but doesn't create worries also from a macro imbalance perspective. So that's the reason why investors have ignored slight tinkering and postponement as long as the broader direction and commitment is being maintained. So if you saw a major fiscal expansion, say of 100 basis points, then obviously investors would worry about that.
Well, I want to take the discussion back to a point that you made earlier, that the sense that you got was that investors would worry about the state election results only in the latter half. I'm presuming the 3 states that you're talking about are the ones that are going to elections in November, December. Until then, you believe the mood will not get dampened if the election results don't go in favor of the BJP?
Yes, unless we see credible national level opinion polls being done, which have really negative signals as far as this government's popularity is concerned. So if you see those opinion polls happening and with some credibility, then obviously markets will worry. But I think the other indicator would be the 3 state elections in the end of 18 rather than now or in the middle.
Gautam, last question really, and just changing the discourse a little bit, but we just did a small piece today based on the Bloomberg terminal of what the actual estimated earnings for FY18 could look like versus what the math seems to be suggesting as well. And I think the dichotomy is only in terms of what the reportage is versus what is printed in the reports. The EPS numbers for FY18 come anywhere between 470 to about 504 or 505. Where is UBS when it comes to FY18 earnings estimates post the third quarter and the growth rates that you're penciling in for FY19?
So I don't know the exact EPS number, but the FY18 estimate is broadly similar to the street, around high single digits. But for FY19, we are looking at 13 to 14% growth for Nifty, and we therefore expect roughly around 10% cut to estimates. So a couple of percentage cut in FY18 estimates and another 8% odd cut, 8 to 9% cut odd in FY19. So roughly 10% cut in estimates for FY19 estimates by the street.
Wow. So you are at the lower end, I would presume, because a lot of brokerages are working with a number which is about 18 to 20% for FY19. You are already starting over at a lower end.
Yes.
Okay.
Yes, and the street consensus forecast is 22%.
Yeah. Okay. So you are maybe not a minority, maybe a realistic number out there. Let's wait and watch what happens there. But Gautam, interesting note. Thanks so much for sharing it with us, and thanks so much for joining us today and speaking to us.
Thank you.